This is how the market looked when it hit its all-time high in 2021. And this is where we are currently in the market. Now, you're probably wondering where the market is heading, and if bad, just how bad will it get? Well, here is some insight on how to prepare for the next Great Depression.
Well, economists are now saying that the U.S. will enter a recession within the next year.
Well, the stock market is experiencing record losses. The Dow lost more than 700 points by closing bell yesterday, falling nearly 2.5%.
Well, Jeff Bezos is warning Americans to brace for recession. In a tweet last night, the Amazon founder wrote, "Yep, the probabilities in this economy tell you to batten down the hatches."
Let's dive deeper into what's happening in the market and determine if a recession is truly coming. Investors are dealing with a great risk from inflation due to the Ukraine-Russia war, and United States stocks have continued to plummet. The S&P 500, a proxy for the health of retirement and college savings accounts in the US, has recorded a new closing low in 2022, its lowest in 2 years, erasing the market's gains in 2021 with a decline of approximately 8%. NASDAQ 100 and the Dow Jones Industrial Average have lost about 33% and 20% respectively. Even the world's most renowned cryptocurrency, Bitcoin, has lost nearly 60% of its value this year. The Federal Reserve is increasing interest rates and implementing policies to curb the highest inflation in decades. Peter Essel, the head of portfolio management at Commonwealth Financial Network, MA, described the plunge as persisting concerns over inflation and the Fed's inability to tame prices without a hard landing. No one is certain how long the recession will last. However, you can still get through this phase in one piece financially. So, how do these successful investors such as Warren Buffett, Elon Musk, Jeff Bezos, Charlie Munger, and other renowned businessmen make it through a recession? These tips will prove useful during and after the recession. Have an emergency fund. Your money will retain its value and liquidity if you have cash in a high-interest FDIC-insured account. The high liquidity allows you to access funds easily in an emergency. Having backup cash would also make you less dependent, preventing you from borrowing high-interest loans. Emergency funds should only cover essential expenses while maintaining your budget. Don't bite more than you can chew. Living within your means during the good times will help you navigate the rainy days. Spouses can save money and pay off mortgages by living off one person's income. You'd find it easy to adjust your spending and avoid debt despite the price surge. Diversify your income. A full-time job shouldn't stop you from getting additional income. In fact, it's like a backup option if you lose a stream of income during the recession. Although you may not make as much money as before, the money would be enough for rainy days. Diversify your investments. You can reduce losses to the barest minimum by investing in different stocks. It would be wise to consider investment pairs, stocks and bonds, in businesses that do not correlate with your primary income source, so when one is up, the other is down, and vice versa. Have a long-term plan. Regardless of how the market drops, you won't lose money if you don't sell. The best investors see a bearish trend as an opportunity to make more money. A bear market now might become bullish in a few years. The market is usually recurrent, so you'd have opportunities to sell high. Manage risks. Investments should give you a sense of financial security, so it's important only to risk what you can afford when investing. Maintain a high credit score. Only people with a good credit score would get approvals for a mortgage and loans. Paying your bills early and keeping a low credit-to-debt ratio will help you have an excellent score. Good news for every investor watching this video. There is a plethora of information for the coming months as we look forward to the earnings season when publicly traded companies release the SEC 13F quarterly report of all stocks traded during Q3 2022. It's high time we put past losses behind us and focus more on what companies have to say for the rest of 2022 and 2023. Eventually, this recession will likely end as the market swings back to an upward trend. However, patience is needed, as the market will remain tough for investors until the focus is shifted to accommodate monetary policies, stronger economic growth, and a rebound in corporate profits as the Fed makes policies to prevent further inflation. The war in Ukraine and rising tensions between the Western countries and Russia will affect the market and investors altogether. Be smart with your money and have an emergency fund. My goal is to make you a better investor. So, if you enjoyed this video, leave a like and subscribe to this channel.